All right, everybody, welcome back to Cashflow Chronicles. It is January 23rd, 2023. Sorry, 2024. Damn. Always here with Kris Patel, the legend. Even though he doesn't like me calling him that.
Not a
We have
legend.
a
Not a
we have,
legend.
we have a lot to talk about. Verizon. They already talked a little bit about it on Finance Junkies, but we're going to dive a little bit more into the numbers. Kris, obviously, and those that follow Kris pretty religiously are up really well on that. So congratulations to everybody in there, and then also Netflix. If we get an opportunity to talk about it, we have that in the background as well. Kris, anything before I cue lay intro?
No. Go for it. Let's
All
do the
right,
intro.
everybody, make sure to hit the like button and subscribe, and we'll see you after the intro.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good.
Huge upside potential, upwards of $60,000.
All right, so let me just hop over into the actual. That's the Netflix shareholder letter. Let's take a look at the Verizon shareholder letter. Maybe before we get into that, Kris, did you at all want to talk about our public portfolio? I have that up as well. I know.
Yeah. Let's bring that up. And
Sorry, I jumped right into this. I was like so excited to look at the numbers, but in reality, you did a really good article over the weekend with actually a two-parter. So for the folks that are looking at Hot Kris's Patreon and have signed up to that, why am I not? Where's the window here?
one thing I realized, Matt,
Yeah.
I have been publishing for the last 2 months with all members. And so there's a bunch of free members that have been getting all the Patreon stuff. So today I was like, oh, you know what? I'll make the Verizon one free for everyone so everyone can see it. It turns out it was free the entire time.
Oh,
man.
man.
I didn't realize it. So
no idea. All right. So here's the public portfolio. Actually on Monday, Kris and I chatted. Friday was a horrible day for Celsius stock. And so it was down something like 11-12%. So it went from the $60 range down to $52.50, $53. And so over the weekend, I messaged Kris and he was like, dude, we got to buy a little bit more. So I think we had 2 shares going into this week. We added 3 shares because we thought it was a good opportunity. So $159 there. That's what this $159 in pending charges here are. So we have about $220 left in cash because that's going to get subtracted out from this 378 that's up top. It won't let me show my pointer. Here's that 3. Why won't let me show the pointer? Not that it really matters, but here's this 378 here. That's the cash. So we'll end up with like 220-ish left in cash, but everything else is doing really well. TQQQ's up over 50%. We had a big bull run on Verizon today, 6-7% there. And we're going to hold this one, man. I'm with you. I think this thing's on a march back to $50. We'll talk a little bit about it when we get into the deeper dive.
And we'll collect good dividends on top of it.
Yeah, that's what I'm most excited about because right now, I mean, we have a few companies that'll pay us a good drip. And I'm excited to kind of reinvest that into, I don't even know what our drip is up to, but probably close to $50-$60 at this point because we're at $1,400. And I guess we're collecting a 5-ish% yield just on the cash. So every single month we'll be getting a little bit of love from that too. Upsellera is still up. I'm trying to think things that have kind of come down. Tells has kind of been hanging flat. That's fine because that's a longer term play. And then Celsius is kind of flat after it's been after we've kind of loaded up a little bit. So excited about what we end up with. And I'm surprised BPYPM is held up as well. But question for you, Kris, is there anything you want to trim or think about adding while we have this up?
No, I think right now is a good time to just keep building up a cash position. I think the ad that we made on Celsius was probably the only one that that's worth really doing. right
Yeah.
now I think there's still a lot of froth in the market. So best to
Agreed.
just, just chill. Sometimes it's a good idea to be patient and just wait until things calm down a little bit. There could be some opportunities going forward in some of the regional banks as well. But
Yeah.
once again, that's all dependent on the macro conditions right now. So, we could still see a little bit of a drawdown. So I think the names that we have on here are good names. We should consider adding Amazon on here. I think Amazon has got some tailwinds behind it that could
Yeah.
lead it to a much higher position, and even Google. So I'd say Google and Amazon, even though they're not the sexy names, because I know even though technically they're good stocks, a lot of retail don't find investing in Amazon and Google and Microsoft to be that sexy. They're like, oh, those are just no brainers. And it's kind of funny because I was having a conversation with a Patreon member and they were like, can you take a look at my portfolio? And they had done exceptionally well
Yeah.
in Google, Microsoft, Amazon. I don't think they had Amazon, but they had done exceptionally well in some really good names. And they're like, oh, what should I do differently? I'm like, why? Why are you doing things differently?
Yeah.
Just find the high quality names and stick to them. You don't need to go and try to find go buy SoFi or go buy this other company. Like you can keep it a very small part of your portfolio, but for the most part, you've got great winners. Let them do their thing. You understand them because their approach was just they wanted to be very hands off. They didn't want to be more like us where we're
Right.
find these opportunities. So to me, if your goal is to basically just enjoy them, I think there's some background sound that's coming. I don't know if that's just me.
Yeah, I could hear that too. I wasn't sure if it was me or might
Yeah.
be.
Yeah. So basically, just stick to the high quality names, stick to some of the index funds out there. There's some really good mutual funds as well that you can buy into. That's not gonna, that's not gonna see you become rich overnight. But if your goal and intention is to beat the S&P or perform like the S&P to its good degree, just stick to the high quality names. You'll do exceptionally well. There's no
That's the
need to
thing.
risk it.
Yeah, I think that sometimes people think too much about, trying to make a 10x or a 20x within a certain amount of time and they end up losing money. And I think sometimes it's about finding companies that are going to be slightly better than the market. And I think that's and even still, sometimes it's not even about beating the market, right? It's about maybe dividends is your game. It doesn't necessarily matter. Maybe low beta, like what you were talking about on finance junkies a little bit, and making sure you don't lose money. That might be your game. Where let's just say you've made $3 million, and you're like, I don't want to risk this $3 million. I'd rather just get my slow and steady dividend where I can make sure that I pay my house bill and my taxes, etc. And I think sometimes so many people try to hit it out of the park that they are trying to gamble with it almost. And one of the famous quotes that I always hear, which is said by Jim Rome, who was the Tony Robbins mentor, he basically said, in order to become a millionaire, you have to think like a millionaire, basically. And he was just like, if your goal is to become a millionaire, it's basically once you hit that $1 million mark, you could throw away the money because you've demonstrated your capability to generate and keep $1 million. So eventually you're just going to be able to continue that path, right? And there are some people that get lucky and stuff like that, but most of the time you have to become a millionaire between the years before the numbers actually show up. So, I mean, if you're not managing your money appropriately, if you can't manage $1,000, $10,000, $100,000, who's to say you're going to be able to manage $1 million? I think it's so funny when a lot of these lottery winners. It's why so many of them go broke. Sorry, I cut you off.
Yeah, no, there's just one thing to just point out, and this is why I think a lot of hedge funds don't necessarily outperform the market. The reason why is very simple. It's because when you're dealing with $100,000, $200,000, you could be very tactical. Like a lot of the gains that I've had over the last few years have been a lot of tactical bets that have gone right. So the return is very outsized. The problem is when you're looking into trying to do the same thing, but with $1 billion, you can't be like, oh, let me buy 500,000 call options on Verizon, because it's just, you can't do it. So you have to play within the confines of the large amount that you have and the liquidity on that. And so the more money you have, the more likely it is that you want to stick to the quality names. Like, so eventually I told you the goal is to raise enough money so that I can just launch an ETF, but that ETF would just primarily, believe it or not, it'll probably just be a lot of high quality names with some tactical plays in the middle here and there to juice up the returns, but it'll never ever perform to the level that I can perform as an individual. It's just it's just really hard. It's just, you can't be a stock.
It was actually pretty funny. This exact conversation happened this morning. One of my previous bosses was at one of our trading offices, just because he's dealing with some renewable stuff and would happen to be there. But it's also where our crude oil trading is. I was like, you should go over there, learn something, whatever. He's like, I should tell him to buy Rocket Lab, and it's like actually kind of a funny joke because it's like UDOC is a pretty big company with the capital expenditure budgets are on the order of $10 billion plus, right? So in that respect, it's like technically it's like we could buy all of Rocket Lab. Like, and so when you think about it, exactly what you're talking about, it's like some of those outsized returns are $200 million companies, $500 million companies. And so when you have these large hedge funds that are 15, 20, sometimes $100 billion under management, it's difficult to be able to move in and out of things because you can't sell. Like if you have this large position, it's like if you were to liquidate it and you own 20% of it, it would take you months to be able to offload it because you need the liquidity to be able to offload it. Otherwise, if you're just like sell it all and you own 20% of a stock, and that's why you see some of these ebbs and flows, right? Of stocks, just normal, even if there's no news, you see the ebbs and flows because you have people that are entering into the stock and it'll slightly rise. And you have people that are exiting the stock and it'll slightly go down. But you have people that are entering one or exiting 1 or 2% positions. And that's exactly what it goes back to. But anyway, I don't know how we got down that tangent, but good conversation on that piece. I was actually thinking about this as not this one, the TLT question, and then we'll maybe run over to Verizon. To me, I'm curious. I'll state my little thoughts here, and then I'm hear what Kris has to say. I have a very firm feeling that right now the market is still pricing in. I thought we were going to take back away from the March cut, and it now feels like this week with the oomph in the market that we've kind of seen. Nvidia's over $600. All this love that we're seeing right now. I still think that people are pricing in a March cut. And I feel like we're going to come down with the hammer of God next week. And people are going to be like, oh, shit, the Fed is not messing around. And I think you're going to see, and I could be 100% wrong on this, but I'm willing to be. I think you're going to see the market sentiment change to more of a May, June. And I've been saying that for a couple of weeks now. I'm just surprised that the market is kind of holding up. And same thing with interest rates. They were kind of going in the opposite direction, meaning TLT as well. Meaning that the interest rates themselves were going back up, but they've kind of paused here a little bit. And I feel like the beginning of next week, middle of next week, I guess, rather, once the Fed comes out again, you're going to see a run because you're going to be hanging out for another 2-3 months at these rates. It's going to give the opportunity to have, and this is kind of why Kris is saying, don't rush to go buy anything right now because the market is still happy. I have a feeling personally that the whole market is going to get pulled down, potentially 3 to 5% after Jerome talks, not immediately, but over the course of the next week or two after that into the middle of February. So I'm curious what Kris's thoughts are. And if that's the case, and we do see that interest rate rise on the 20-year again, I'd be looking to buy TLT back again in the mid to high 80s, which I think it'll probably get back to.
So I'm going to take a little bit of a counter narrative to that and just say that there are a lot of great companies with strong and stable yields that are worth investing in over the next 6 months. And the reason for that is very simple. When it comes to TLT, you're banking on
yields, meaning dividends, or
yeah, dividends. And the reason why I would say that is because right now there isn't nearly as much yield chasing. I think that over the next 2-3 years, we're going to see this deflationary environment come in, and people will be begging for a 7 to 8% yield. That's not only yielding 7 to 8%, but it's also growing on top of it. So there's like a ton of great companies that have very great, like good business models that are going to get bid up over the next couple of years. So you'll get both the capital appreciation and also the income appreciation. The key though is just being smart about it, and not going a little too crazy with them. So a lot of those opportunities are going to be coming our way in the next probably 6 to 9 months. I think at this point, we can safely say that yields in 2024 are definitely going to be lower than what towards the end of 2024 are going to be lower than what they are today. The only thing is a lot of people's expectations kind of ran a little bit ahead of that. So I think right now is a good time to just keep an eye on those names. And we do that. So once that gets factored in, you're going to see a lot of capital appreciation in the future when it comes to that. So I think TLT is good, and it's a great play tactically right now. But I think that there's more value in looking for the companies that can actually grow their dividends as well. So not only can they cover their dividends, but grow them. Because if you're looking at TLT will do good. I'm not saying they won't, but I think the opportunity is in the growth of the yield rather than buying something with a fixed yield that's going to fluctuate, So if you buy
stick
TLT
out like a sore thumb too. Like it's exactly the same trend that you're playing with Verizon. So before I pull up your Verizon chart that you have, or the graphics that you have, it's like these things stick out like a sore thumb. And let me pull up the 5-year. But late 2021, mid 2021, when they start talking about raising interest rates, right? This is exactly what they're all looking like. And a lot of these companies, specific, maybe not Verizon, but a lot of these ESG companies that loaded on a lot of debt, renewables companies, they've all taken a really big turnaround in 2022. They were all spiking in 2021 because all the ESG talk. And then like NextEra is the one that I'm playing personally. When everything push came to shove and mid to end 2023, I was buying and loading up on NextEra. I didn't buy the perfect bottom, but I still got it at a good price where I'm kind of break even right now. But that was an $80-$90 stock, less than a year ago. And now it's sitting below $60. And it's one of those things. And once interest rates kind of turn around, just like you're seeing with Verizon here, I feel like a lot of those companies will spring back to where they were trading kind of maybe not pre-pandemic, because that was zero interest rate policy, but somewhere closer to it,
Yeah. And remember, companies are also generating income, right? They're holding that net income and investing it back into the business. So a lot of that profit is kind of like already giving you a lot more equity in the future. So yeah, let's take a look at this real quick, and then we can go to the next thing. So so this is the earnings, just a quick highlight. I'm not going to go too far into it, but the key to remember here is this right here. This is probably the most exciting portion of this report. And so a lot of my due diligence covered how Verizon was in this capex reduction cycle that's going to be going forward, while at the same time their cash flows are actually still relatively keeping up, and then you have on top of it dividends that are there too. So if you look at just purely, if you don't want to do the math on all this other things, cash from operations, they generated 37 billion last year. They generated 37.5. So not a lot of operational income. Cash flow growth, but you can see here that they reduced down their capex from 23 billion to 18.8 billion, which means that their free cash flow grows significantly. And on top of it, their dividend is very well covered now. So they can use this cash flow to delever. Right. So right now they're gaining a lot of subscribers, which means that there will be future growth that's coming in. But just the sheer size of Verizon right now means that it's not going to reflect heavily here on like its number. So even though they added close to almost 375 fixed and then another it's a large amount of net ads that they had, but at the same time their growth is not going to be reflected in their revenues. But what's more important is their cash flow. So if you look here, their capex This year they spent 18.8 billion in capex. Next year they're planning on even reducing that down further to 17 billion, right? Which means that if they generate, let's say over here, 38 billion, right? That means that they'll have way more free cash flow in the $20 billion mark. I mean, which company has $20 billion in free cash flow like that? And then you value it against what the total market cap of the company is. It just goes to show that this is a very undervalued company. There's also some tax changes that are coming online that are very beneficial for companies like Verizon, who have had a lot of capex. But this is where I think a lot of people get hung up on companies like Verizon, where they don't understand what the true value is. And yeah, I mean, the business is doing very well. So if you look at their guidance on free cash flow and everything else, it's well in excess of what a lot of people were assuming. And then on top of it, that free cash flow is going to lower down the debt that they have, which means that future cash flows, instead of going towards interest payments, will go towards buying back down more debt. And it's just constant. It's like this cycle that you're going to see for Verizon for the foreseeable future, for the next 2, 3, even 5 years. So yeah, I said, this was
to give some color. The 37.5 billion, right? The $177 billion stock right now. So that means just from the price to cash flow from operations, you're looking at less than 5x, right? And say you take into account the capital expenditures, right? So you add in the 18 odd billion. Even still, from a free cash perspective, if they, say they wanted to get rid of the debt, et cetera, they'd have that path. But if you were to think about it from this perspective, price to free cash, meaning after capital expenditures, before the dividend, 10x. So the company's worth $177 billion today at the $42 price. They're making $18 billion in free cash. So was it 18 billion? I forget what it was. Was it 18 billion or was that the capex? You're on mute.
That was the capex.
Well, what was the free cash? Was it? I might have messed up the calculation.
Let me just be 100%.
It was around there, wasn't it? It had to be, because
yeah. It was. Let me just be exact with it, because I don't want to say the wrong number.
Yeah.
And I closed it already.
You're quick to get off of it. Yeah, it's about the same. Free cash 18.7 billion. So
yeah,
price to free cash is less than 10. So if they wanted to, they could buy back all the stock within 10 years. Which, if you think about it, that would actually help, their dividends paid. Yes, they'd pay out 11 billion, or they'd still be able to increase their yield on the stocks that are remaining. But anyway, some companies worry about that piece. They try to balance, the yield continuing to go up with the amount that they actually distribute. And some companies worry about that. I don't think Verizon really worries about that all too much. But I think the one thing that I'm looking for in Verizon is the FiOS was a huge thing in the late 90s, early 2000s. That was the big thing. Fiber optic cable is going to be the way. Now you have 5G. I'm really curious how the margins look, right? And that'll obviously lower.
You were right. It was 18.7 billion in free cash flow. And capex was 18.8. So next year, capex is being guided to be 17 billion, which means you'll have about a 1.8 billion in additional savings from capex reduction, but then also you'll probably get some revenue boost at the top of it. So you might grab another $1 billion of additional free cash flow, which means that the free cash flow next year is probably going to be close to 20 billion, roughly speaking. Yeah.
So if you do that, meaning the year that we're in, right? Fiscal year 24, I mean, it might go from a 10 price to free cash flow of about less than 10 to less than 9, which, is absolutely insanity. And I think that's why you probably saw the bump that you saw today. So really good call out for this one. And I think it's only going to get better, man. I honestly am truly believing that the 5G is going to have higher margins. So you're going to slowly creep that up over time, and you're going to retire probably some of the FiOS, and those customers will probably move over. I actually just received a message 2 or 3 days ago that it's finally available in my neighborhood. So I'm curious, and I'll be talking to my neighbors if any of them sign up for it. Had it been a week earlier where they got it set up, I probably would have said F Comcast Xfinity, who I have now, but they just came out and replaced all the lines underneath my house. So I haven't had a problem with internet since. But if they had waited another week before they came out and fixed my internet, I'd probably be signing up for Verizon today. But that's a different story for a different day. Curious if you have any other thoughts about any other companies. Otherwise, we can hop over to Netflix and kind of just do a raw look at that. I know you guys touched on it on FJ as well.
Yeah, we could just go into Netflix. I haven't looked into their numbers as much as other people. Like, Netflix has always been one of those things for me that the business is somewhat not as in my wheelhouse. Content production costs have always been my biggest issue, where I don't necessarily think it's that predictable.
Right.
But in Netflix's case, it seems like it is predictable. Like, I think that sometimes the bear case on Netflix was that they might be overpaying for production, but clearly it doesn't seem to be the case, So
Yeah, I think you hit it on the head. Like for a while, when you said this on Finance Junkies, it's like their content for a while just seemed like they're really just trying to get as much out as possible, regardless of spend, just to kind of get like a catalog of stuff. And now I think they're really honing in on what actually makes them their bread and butter. So I just kind of want to look in specifically, how much income they're making, what their actual financials look like. So let me
just look at that crazy growth though. Like, where are they finding 13 million people?
I was really surprised. I was like, is that a typo? Because normally they've been like really slowing down in terms of the amount of people that they're adding.
Well, what they did was, this is the other thing too. Like, they partnered with Verizon to offer lower cost plans. So if you're a Verizon customer, you can get HBO Max and Netflix for $10. Like, it's crazy. Like, how, but the added benefit here for Netflix is that now they actually have an ad stream. So now people, like, in terms of cost, it's cost you a cup of coffee to have a subscription to Netflix. You'll watch a couple of ads here and there, but for most people, they're like, whatever. So it's such a low cost, I think, that I think that's what's driving it. So if you look at like the total revenue growth, it didn't go up that much compared to last year. Like, you're looking at about 300 million roughly, or a little less than 300 million of increases in revenue. But at the same time, you've had this giant increase in paid memberships. I mean, I guess it does kind of just reflect, because if you look at it, Q4, 12.5% growth in revenue and 12.8%. So I mean, it does reflect, I guess.
Yeah,
I don't know.
Yeah, just to give some light, I think you accidentally misspoke there. Quarter over quarter, the growth was about 300 million. Year over year, it's about 1 billion. So 12% increase year over year. Pretty impressive. And they're going to grow another close to 400 million from this quarter to next. Net income continues to be massive.
I'm sorry, I didn't mean to interrupt. I didn't realize that they were doing share buybacks. Do you notice that?
I did notice that too. It's one of the things I saw earlier. I was like, it's small, but I mean, it's enough. I mean, oh shit, I'm sorry. Holy crap. New light. I wasn't even paying attention to the fourth quarter buybacks. I only paid attention to the went 452 in Q1. This is before we went on the show. From 452 in Q1 to 450 in Q3. For some reason, because it was grayed out, I didn't even see the 444. That's kind of a big deal.
Yeah, I don't know what's going. You know what? We definitely should do a little bit more of a deep dive into this. I mean, because I'm always a big fan of share buybacks, man. Share buybacks can boost up. Boost it.
You got me thinking, Mr. Patel. I'm curious what their capex is, right? So I guess it has it right here. So net cash is 1.6. There's no way they're not spending more. They have to be spending more, Kris. I mean, there's no way they're spending less than.
Yeah, I think they're doing maybe a little bit less in terms of original content and more licensing. I don't know. Like I said,
Like, am I going crazy? Like, are they really only spending like 50 to 100 million
I
a
mean, if you look
quarter
at
in
their
content?
if you look at their operating margins, they've improved significantly since Q4 of 2022. They went from 7% operating margins to 22.4%. I mean, they took some operating margin loss here this quarter where they dropped down to 16.9, but it's still
It says it's going to jump up. Yeah,
all
that's
right. But then on top of it, you look at the operating margin is going to expand next year to 26%. You know,
what the hell?
huh? Interesting.
Like, if they
Interesting.
have the ability to, like, I'm curious to take a quick look because the $200 billion stock, right? I mean, let's just do some quick math. What was so it's about $500 a share, right? So they bought back six. Let's just call it 6 million shares at 500 apiece. So they spent about 3 billion in share buybacks in the past quarter.
I
I
guess.
don't. That's not sustainable for the long term. But I guess maybe what I would be curious to look more into their numbers and their 10Q is how much cash do they have on hand? Because maybe what we're not seeing is this is from operating activities. So this is specifically not including cash and interest income. So what might be in the background is it might be say 1.6 billion from operating activities, but it might be 500 million from influx of interest income. Let's just say they have $10 billion or something on the balance sheet. Um, I don't know.
I don't know.
Uh,
We'd have to really dig down deep. I think this is one of those things that trying to do it live may not be as helpful. Like, unfortunately, when it comes to in like really doing good due diligence and math, you really have to look at the numbers. Wait, go back up to that. Let me see.
Yeah, this one
What
was
does
pretty
that say?
interesting. It's kind of separates it into different avenues, and it kind of shows what market share it looks like of
Yeah.
Netflix per. So it's like 8% in the US, 9% in the UK, 5% in Mexico. So I guess what they're trying to show is that these are growing markets, I guess, and that
Yeah.
yeah,
And that they
like,
still have a lot more room to go. I think
yeah.
that's what it means. That means that right now streaming is being replaced by, I mean, a linear is being replaced by streaming. And
Mhm.
so Netflix could gain market share. Because I mean, if you think about it, it's only 9% of UK screens and 8%. That's it's not a lot. That
And
means
it
that there's a
shows, yeah,
lot
it
more room
shows
to
that
grow.
you still have 2.5x, like until it completely, I guess, replaces linear. It's like, well, this could grow from 8% in that respect to closer to 16 to 20%, if you think about it
Yeah.
that way. If they
Yeah.
keep the same market share as this goes from 36 to 100%. So it's
That's
pretty
yeah.
pretty interesting. I think they said like this is potentially a where did they say it? Something
And
like a
remember,
$600 billion
they
market or
can
something.
they can do incremental price increases once they get monopolistic like demand. You know what I mean? Like once you
Yeah.
hit a certain point, you can just say, "Ah, we'll raise it by $1 this year," and people will be like, "Ah, whatever, it's only $1. Who gives a shit?" But if you think about it, if you're scaled up and you got 200, what? How many subscribers do they have total now?
I don't know, but I want to see if they have it in here. But this
Yeah.
is this is what I saw, kind of relating back to that graphic we just saw. If we continue to execute well and drive continuous improvement with a better slate, easier discovery, more fandom, while establishing ourselves in new areas like advertising and games, believe a lot more room to grow. It's a $600 billion opportunity revenue market across pay TV, films, games, and branded advertising. Today, we only account for 5% of that market, which kind of goes back to this graphic, right? But I'm curious, yeah, where they have the. I wish they like they don't even like. I would try looking for their investor deck presentation and couldn't couldn't find it. Yeah, it's one of those things where oh here we go, paid members. So they're up to 80 just for paid. That's in UCAN. I guess that's United States, Canada, America. I don't know. EMEA. 88, 46, ASPAC is 45. So looks like over 200 million. Did I lose you, Chris?
No. I got to look into this, man. Like
It's an
for
interesting
some
one. Man.
for some reason, I thought that they had already hit this, the top of the S curve, and
That's
it
what I
doesn't
just
seem
thought.
like that's the case. Like, so what we're trying to say here, guys, in the chat, businesses when they come around, they usually have this S curve like function where, you have this steady, and then they just hit this wildfire growth phase where they just go higher and higher, and then kind of like you start to run out of consumers, right? So every incremental gain is much more harder fought. So then what happens is your additional gains are kind of like this. So what happens is right now, I thought Netflix was
But it was done.
what
Not
I,
done like it was going to zero, like done in terms of like it was mature. Right.
right, exactly, and that doesn't
I thought
seem
they
to
were
be
going to be
the case.
fighting for margins, lowering capex, etc. But I'm an idiot.
Yeah,
Is what I'm kind of finding out.
dude, Ackman is an idiot too. I mean, Ackman got caught on the other side of this, where he actually had Netflix for a long time, and then he actually sold out, and yeah, that was interesting. Whatever.
Curious what I still want to know. They have it in the cash flow. Is this cash flow statement can see? No, that's just the income statement. I'm curious where the hell this cash flow comes from. I guess. So net income about $1 billion this quarter. Where is it? 12 months. So 5.4 in net income this quarter. Then you have amortization, stock-based compensation, 300 million. So in terms of actual cash from operating activities, 7.2. Proceeds from maturities of short-term investments was 1.4 billion. Oops.
You know what? Let's actually deep dive into this tomorrow. I have to head out, but this
Yeah,
is very interesting. The repurchase of common stock, right there. Look at that.
$6 billion worth. Yeah,
Yeah,
interesting. No, this is an interesting one, Chris. I
yeah.
might have to do the same with you, and I might write an article about it on Seeking Alpha about how I'm a complete idiot and how I need to.
We're all idiots. We're all
Well, that's
idiots
the
that we
thing,
make
man. When
this.
you don't, when you kind of just look at the surface level, I know you got to go. When you look at the surface level, you might not fully recognize, and if you do a little bit more diving, you might actually bring some of this stuff to light. Which, if you just read the headlines, they're just trying to sell you advertising at the end of the day. But
Yeah.
um, I'll be curious to see. Make sure you guys sign up for Chris's Patreon. We might be doing a due diligence on it. And I might be writing an article on Seeking Alpha about it. We'll see. But Chris, I'm just going to hang out here and answer some questions
Yeah.
that people want, and I'll
Later.
talk to you tomorrow, man.
Have a good one, guys. Take care.
Yeah. All right. Always having a good time when Chris is around, man. He's a smart guy. To be honest with you, was not expecting to stumble upon Netflix like that. That is something that I'm very, very kind of curious about. But I also wanted to shout out you Verizon guys. Man, congratulations on that. I wasn't expecting Verizon to do that much of a big turnaround, but let's go to the top of the chat, see how everyone's doing, and then we might end this out 10, 20 minutes, depending on how many questions and stuff like that. Zach, what's going on? Hopefully everything is going well. Michael, PFE pays a 42-cent dividend. That's one I need to look at as well in their pipeline. Dean Pierce, what's going on, my guy? I saw you answer or ask a question earlier. Part of the money gang. Glad that you're always here. Fixed wireless is still growing strong in favor. A lot of people hear 5G for internet. They think old tech. It's a good point. Oil stocks, oil's going to zero, my friend, as it has been since the pandemic, as many say. So cold. We are, damn it, Prestige Worldwide. That's what we should have called the channel instead of Cashflow Chronicles. Why is that important? India, yeah, they took a big dump today, right? It was like 3%. Let's pull that up really quick. Thanks for reminding me, June, because like I was looking up. So I know hot, why is it China ETF? There we go. MCHI. So no, Hot Amit talked about China and the buybacks, or not buybacks, the relief package that they are doing. And so with that relief package, they obviously were up pretty significantly today for China. And then I was like, well, what's going on in India? Because India's been on a kind of a run. So what's the Nifty 50 looking like? And today alone, they were down 2%. So I thought that was pretty interesting. I didn't know if there was actually some sort of news that would drive India, or if it was strictly the fact that China is getting the stimulus. I wasn't really sure what was kind of going on. Yeah, for the price of Netflix, I mean, $7.5 billion in net income, and it being a $200-some billion stock. Let's just do quick maths on that. It's probably a PE of like 30 something. So 220 divided by 7.5. So it's like a 30 PE. So I guess it really all just depends on how much it's going to continue to grow and where do you think it's going to go, right? But yeah, if anyone knows what the hell happened to India, I'd be more than curious and happy to talk about it. Yeah, I did see that Verizon HBO Max deal with Netflix. So they're offering that for cheap. And Uncle Scotty says, so much money in the sidelines now after selling your property. You need new ideas. 40% of your money is on the sidelines. Hey, man, you can just hang out. Take your time. You're getting 4 to 5% on your money. You could always write some cash secured puts, deep out of the money. I'm not talking about at the money stuff. I'm talking about, look at something weekly. If you're looking for a good entry price on the S&P, you don't need to break the bank. You don't need to rush it. Take your time. When you got married, Netflix lost a subscriber. Dude, buy puts. We're buying puts. People are getting married, losing Netflix subscribers. It's going to be a thing in the next 10 years. I promise you. The strike caused less spending. That's a possibility. That's a really good possibility. Netflix has been killing it in the animation space lately, especially with Disney ass over elbow under Kathleen Kennedy. I know at least when we were in the Airbnb in August, when I was in Tennessee with my nephews, they were all about one of the shows or something on Netflix. Maybe it was on Disney Plus, but I'm pretty sure it was on Netflix, and they were all about it. Did you watch the Musk SpaceX update a few weeks back where he kept repeating Starlink is not a competitor to telecom companies? Classic Peter Thiel school of thought to deny eventual monopoly. With this one, at the moment, right, I would agree. I think that I'm with you in time that eventually the better opportunity will be something like that. But I think we're some time away. At the moment, it's really for remote locations. And I asked my one buddy, he has a cabin in rural, like remote, I think it's like Oregon or something like that. Maybe it's in Montana. And he said, yeah, man, it's slow. It's like 30 megabytes per second is the max that he can get. And he's like, I'm happy with it because I didn't have internet before up there. So he's all excited about it. But yeah, not economic enough to replace fixed wireless as of yet. Coupling with this, he actually had I don't know if it was a couple weeks ago or what, but the amount of launches that they had in this year alone was huge. So I'm really curious to see what the revenue came out as, because I just wrote an article about Rocket Lab, and in 2022, their revenue was like $4 to $5 billion. So their price to sales of them, when if you think about it, because I think at that time they were valued between 100 and 150 billion, the price of sales for the organization was on the order of 20 to 30x. Rocket Lab is sitting at a 10 because their revenue is about $250 million. And so if they increase to, let's say, 400 million and they stay at 2.5, their price to sales is going to go down to like 7.5. And so I'm curious, at what point does the price of sales for Rocket Lab eventually go up? And I think a lot of it has to do with the fact that they're still not cash flow break even or EBITDA positive even at this point. So hopefully in the future it goes well. Let's see. Talk about rum. I don't know much about it, man. I really don't. But I know you're all about it. Yeah, Kris has always got to do a little bit more research. I'm excited that he's excited. Any thoughts on how sports media rights will be depreciated, amortized by streaming companies? Usually 4 to 5 deals. I want to talk briefly about this. It might not necessarily be 100% what you're referring to, but like the Amazon Prime taking on the NFL playoffs, you're sitting there being like $100 million or whatever for the rights to it. And you start thinking, I think just for that night, they had a special. You could view it for $5 or something, or you could sign up. And I think instantly for the NFL playoffs, they had like 10 million signups or something like that. Or maybe it was like 2 million signups. Even still, let's just do the quick math. So let's just say you have 2 million signups for that. And then you end up spending $5 a month, right? So just that alone, you get 10 million bucks just for that. And then say that only 50% of those people remain on for the year. So let's just say you walk away with, say, $60 million. So you paid $100 million. You already got $60 million in terms of revenue. And then the amount of advertising you're probably going to be getting about, $500,000 per every second of advertising. I mean, it's pretty ingenious to think about what Amazon did to be able to, and Paramount did to be able to stream those games. Pretty crazy. Newest all-in podcast look at Netflix was considering a significant customer churn, almost 50% a year. Hey, I actually did just start watching that, and they were talking about how like Stars, there's like 12% churn a month. And I have to look at it a little bit because if I remember correctly, where was that? G10. If I remember correctly, Netflix was the lowest of the streamers in terms of churn. But if it's still at 50% a month, that's pretty crazy. So Sony canceled the 10 billion merger, impacted big time on sentiments. I have to double check that one. I don't know anything about that. I'd buy some land for growing food, maybe some chickens if I had the money. Burning a hole in your pocket. Thoughts on Gilt? Gilt, like the clothing company? GILT? Oh, Galat Satellites? Don't know anything about it, my man. Could be great. It could be. Apparently, it looks like it makes money. So, no hate on it. I just don't know. Economy, India economy news. Economy to hit 5 trillion in 2024 to 2025 and double over the next 6 years. Excited about that one. Rocket Lab, though, is a completely different beast, and Peter Beck is an absolute superstar. I couldn't agree more. They are doing a phenomenal job. If I buy BPTIX, Ron Barron's fund, am I really getting 10% SpaceX? I wouldn't say anything about that one, my guy. What about PFE with a dividend? Let's do some live PFE. What do you guys think? Hopefully, I don't make an ass of myself. But I'm curious because everybody and their mom is getting in on Pfizer. And so let's do some live Pfizer to understand what the heck and why. Events and presentations. This is their fourth quarter. Is going to be at 10 a.m. So let's blow up this bad boy. You can see this, right? Okay, cool. So this was Halloween. So year to date, 457 patients, etc. All this is their pipeline. So these are all the things that they did launch. Got it. So financial review. Revenues were down 41%. Right? Oh, these are specific drugs, I guess. Quarterly statement of operations. Revenues were down 13.2, which was down 41%. Interesting. Adjusted R&D flat. Loss per share 42 cents. Revenue impacts from foreign exchange. Cost of sales were up 44%. So let's see. Still guiding for 58 to 61, which I guess a lot of this has to do with the fact that they do not have the um the booster shots, I guess, being out there. So much down comparatively to last year. They're reinvesting into the business. Let's see, what's like a good cash flow statement here? That's all I really. Is there like a no 9-month comparison? Did I blow past it? So 2023 guidance. Tax rate, income, cost of sales. So on an EPS basis, they're looking at $1.65 at the peak. So let's just say we're at $30 divided by $1.65. It's trading at a price to earnings of 18. So I guess my question is are they going to continue to do well? And they wrote off 5.6 billion, which which was the number 3. One time include a non-cash revenue reversal of approximately 4.2 related to the return of an estimated 7.9 treatment courses of U.S. government UEA labeled expected in the fourth quarter of 23. A non-cash charge of 5.6 recorded to cost of sales in the third quarter of 2023 for pandemic-related products, inventory write-offs, and other charges. So basically, it gets chargebacks on vaccines, it looks like. So that was probably the big reason for the downfall. My question is they gave a guidance of 1.45 to 1.65. They're obviously going hugely negative because of that chargeback, that $5.6 billion chargeback. Their revenue obviously gets impacted pretty significantly. My question is, will they grow from this 1.45 to 1.65? Because if that's the case and they hang out at that, they're already kind of trading at 18, which, let's just be frank, Pfizer is a pretty premier organization. So I think trading at between 20 and 25 is reasonable. So, on the low end, I could see the stock 145 times 20 being at 29, which it is, to 165, let's just say, to being at 40 bucks. So anywhere between 30 and 40 bucks, I could see a reasonable valuation based off of this current diluted EPS. Now my question is what's adjusted? C2526 for additional information. So 25, they say, refers to applicable revenues defined, adjusted income losses are defined as US GAAP, etc. So I assume it's just something to do with like share-based compensation or something. That's what the majority of them are. But I'm kind of curious now. So in the background, what I'm going to do is I'm just going to look for maybe like a Pfizer earnings growth in the background and see what people's thoughts are. That's for that. I'm looking for like the full year bullies for next year. Okay, this is what I'm looking for. Here we go, my guys. I found a good one. So this is what folks are looking for. Apologies, it's kind of small. So let me zoom in a little bit. And why is this important to me? So Pfizer's a mature company, right? They've kind of now gotten rid of a lot of the booster shot income, as you saw that big reversal write-off associated with the government, 5.6 billion. So if you just look at current year, people are looking at about $1.55. right? So if you were to say $1.55, price to earnings at 20, you're looking at a $30, $31 stock. But that's today, right? I mean, now we're in 2024, right? So this number is going to be coming out. Is it going to be $1.55? Is it going to be $1.60, $1.65? Who really knows? But I'd say it's appropriately valued for today. The big jumper, my guys, is on a low estimate, which we were seeing here, of about $2. So if you go to $1.97, you'd multiply that by a 20. Hell, let's multiply by what the current PE is, which is 18. Multiply that by 18, you're looking at a $35 stock. Now, this is estimates from Yahoo. It's like 21 different people that are forecasting this. Now, on an average estimate, 227, let's just say it's a 20x multiple, you're looking at 45. But let's just say we use 15, 227. Even using 15x multiple, you're at $34. Use the 18, which we're at today, 227. We're at $41 in terms of the price. So it's a 33% increase from where we are today. And let's just say we hit that high side. It's pretty cray-cray, but let's do it. Let's check. 325, let's just say we start at 15. A 15x multiple on this high side. You're looking at $48, $49. 325, let's take the 18, which is the current price to earnings multiple. You're looking at $58. And I'm not going to do a 20x because that's just insanity. I don't think it's going to go to $60. But my question is like, where is this 227 coming in? Like, are we hitting next quarter? People are estimating $0.6. So people are estimating right off the bat that we start moving and grooving. They're assuming that we're kind of on an average at a $2.40 run rate for the year. So that's pretty impressive, my guys. I can see where people are getting into it. Now, my problem with this is, and then I'll probably scroll up, answer a few questions, and call it a day, is how much can you believe that, right? And what information is in there that isn't necessarily available to the public. So I'm curious, man. I think it could be an opportunity. I've actually thought about writing some cash secured puts on it to get a little bit of income. So PFE is Pfizer. I'm sure somebody answered that in the questions. Thoughts on CleanSpark? I haven't done any analysis on CleanSpark. I've done some on Hut 8, and I was very terrified. So I don't understand how at this point some of these companies don't make any money. So I'm petrified, and I don't understand if they just overinvest because they put all their money in crypto or what. And I'm a crypto bull. Like, I think Bitcoin's going to do great. I personally believe that we will see more likely over $150,000 Bitcoin in the next 18 months. And you're probably sitting there being like, this guy's into Bitcoin? Yeah, I am. I've been messing around with crypto. I mine it on the week. I hobby mine Ethereum Classic. I got like 100 of those. So I'm hoping that goes to 1,000. It won't, but I'm hoping it does, because then I got, $100,000 right there. But I got some Ethereum. I have about a Bitcoin. So I hope it goes to 150,000 because Maddie needs another beach house. So hope that continues to do well. Upseller is your best bet for pharmaceutical and healthcare industry, cash flow machine 5 years down the line. I hope, man. I got to see when they report, because I always love looking at them and looking at their cash burn. Don't you want exposure to gene editing technology? Kris and I have a small position at Upseller in the public portfolio, for those of you guys that don't remember. And then he has a much larger position than I. I started buying in my Robinhood. I have my Robinhood right here. How many shares I got? I have 50 shares. And I buy, what is my reoccurring? I buy $35 every time I get paid. I'm buying about 4 or 5 shares every time I get paid. I'm up about 10%, $280. So I'd like to get it to like a couple thousand, like, if this is stuff that, this is the thing. I do this stuff on things like I look at this as a hobby, right? Like, so I'm buying Accelera in Robinhood. I'm buying NEXT in Robinhood, and it's like what it comes directly out of my bank account. What else would I do with it, right? It would go to pay off the credit card. Like, this is the shit that I love to do. So my NEXT, that's up to $100. I have 17, 18 shares of that. My hope is that NEXT, whatever I put into it long term, I'm hoping I get 50% on an annual basis in terms of yield in like 10 years. So if I have a $5,000 position, I hope I get about a $2,500 annual yield from it. That'd be dope. Yeah, a lot of people talk about XBI. I'm not really 100% on that bad boy. I just need PFE to go to 35 January 2026, and these spreads will print. Good luck, my guy. I'm sure that'll do well, especially if you got in pretty good price, because PFE, if I remember correctly, dipped down to like 25. Let me see. 26. So maybe that was this. So there's a 52-week low. Yeah, 26 was the 52-week on PFE. So hopefully you got that. Have you heard of anything about lunar intuitive machines? It's been mentioned to me by various friends. So Space Dock's going to start researching it tomorrow. I haven't. I'm 100% honest with you. It might be something I need to look into, my guy. Much appreciated for the thought. Experiment. What stops Rocket Lab from having a royalty-based business model for their in-space manufacturing clients in the future, providing launch services for dirt cheap, an Accelera-type model for low Earth orbit manufacturing? It could very well be. I'm honestly trying to think, right? What exactly is there? And satellite monitoring, telemetry, etc., has been something that's been thrown around, and a lot of these recent contracts in like from the Denver, what do they call it? Like the space monitoring. I literally wrote it the other day. I apologize that I don't remember. But basically, they have a space monitoring center where they're going to keep track of the MDA satellites that they're creating for Globalstar, and then the SDA, Space Development Agency. Those are both in the contracts of being able to like monitor from there. So I'm curious if there's something associated with eventually in the next 10 years, the International Space Station will be decommissioned. So I feel like there's something associated with that. And then second, when you put up something that will be replacing the International Space Agency, could that be run as well and monitored out of Denver rather than, say, NASA or somebody else having to monitor it? So Joshua Storm says Pfizer has partnerships with Beam Therapeutic, the leader in base editing gene technology. Interesting. Pfizer is invested in many gene editing companies, and a couple things they are partnered with: CRISPR or Beam or NTLA. Don't remember who. Well, Josh just mentioned that one. So I'm glad. This is part of the beauty of investing with friends and talking about it with friends. You get to learn more with Beam. Yep. Next pandemic in the works. Potentially, my guy. What's the driving force? I guess getting back to normal EPS. Regeneron is partnered with Intella, and Vertex is partnered with CRISPR Therapeutics. Let's see. Long-term catalyst. I think it's just literally just the slight earnings growth. Yeah, Matt's got money to burn on crypto. That's the thing, man. When you have a decent portfolio, like this is the way I looked at it. I think I told this a million times, so I apologize. It got to the point where I think this was like 2020, maybe it was 2021. It was like going from 15,000 to 20,000. And I think it was like 2020 or 2021. I was either on pace to make 20 or I did make 20. I remember writing 20 on a tax return somewhere for dividends. And then I think the following year I was on track to make like $28,000 in dividends. Sorry, I'm just getting the dust off my laptop. I really should like close this laptop. There's dust everywhere because the fan, sucks it. So moves the dust over to it. And I was like, what do I need $28,000 in dividends for? I'm like 30 years old at the time. I'm like, that's dope. That's cool. Like, do I go buy a Lambo? Like, what am I going to spend 30 grand? And I'm like, or I don't invest in dividend income stocks because I'm underperforming the market and I focus more on just long-term appreciation. And so like I've kind of transitioned, right? And if I focused on dividend stocks last year, I don't know what my annual return was because some portfolios, some accounts made 100% return. I think my biggest account made 70%, and then my 401k made 30%. So the 100% return account was very small. It's like 10 grand or something like that. So I think that was just invested in something that was already demolished or something in 2022. So when it returned, I think it did really well. But the big account, which is close to seven figures itself, returned about 70%. And a lot of that was rebound from 2022. And then the 401k was also rebound from 2022. So I would say last year alone, I returned somewhere between 30 something percent to 70%, somewhere within that realm. And I'd say it probably veers closer to the 70%, but I just don't know the number. So which is not like, I'm not boasting, by the way. I think everyone did really well last year. Had we not had a horrible 2022, I had a horrible 2022. I was down probably the equivalent of the house that I'm in right now was how much I was down in 2022. So to get that back and then some is nice. So that alone definitely beats. If I was still within dividend paying stocks throughout 22, throughout 23 to now, okay, maybe I'd be at like $35,000 a year in dividends, but the amount of appreciation I've gotten in that time period is hundreds of thousands of dollars more. And I think where I've come to the mention of last year or 2 years ago when I kind of made this transition was that I did a quick look. I was underperforming the market for sure when I was dividend investing. And at the time, I did it knowingly. Like, I was like, oh, I just care about the dividends that are coming in. So I'm okay with underperforming. And then it got to the point where it's like, I have a steady job, income, etc. Why am I underperforming? And that's when I made the decision. And so I'm just very glad that I've made that decision. I've gotten a little bit more risky. And the more wealthy I get, the more I realize that money is a tool and you need to stop worrying about it, hiding it under a mattress and like holding on to it as tight as you can. And you literally just need to throw it out there and make shit work. And the older I get, the more wealthy I get, the more happy I am to do something like that. What's my bull case for Rocket Lab in 10 years? I think it's in 10 years, so 2024, or sorry, 2034, 2035, let's say. I think it's a $25 billion stock minimum. So 10x. 50 billion is going to be a big ask, but that's the thing. I think if they really establish themselves as the number 2 behind SpaceX, it could be pretty big. But I'd say for now, like the most bullish case, maybe 50 billion. So a 20x from here. But that's on market cap, right? So I don't really think there's going to be much share dilution, but you really never know. Don't read this, Matt. Why are you still reading? Nice. You read until the end. What? Don't read this, Matt. Why are you still reading? Nice. You read I can't. English isn't my second. There isn't my first language, right? It's my second, and numbers are my first. So I think he's literally trying to connect with the community. That's why he's still reading. Oh, you guys making fun of me because I'm reading? Been at it for 15 years, almost 4K in dividends. Hell yes. That gets me fired up, guy. Try to avoid dividend stocks because it increases your taxes. It could, yeah. I mean, it wouldn't decrease, that's for sure. Well, again, Indian stocks usually try to mimic US with 2 to 4 year lag in terms of adoption has worked well for you. Could be. Hot Tevis. Be sure, you guys, to go hang out with Hot Tevis. He's a good guy. He does a good show on fintech, and mostly focuses on SoFi, but he also does some other looks at fintech. So, you are, man. You are an asshole. F you, bro. No, I'm just kidding. Hope you guys are having a good night. Hopefully you guys had a great start to the week. I'm very surprised that overall the market is holding up here. I really honestly thought we would take a pullback. We have yet to take a pullback. I'm fearing what next week has in store for us. I really think the hammer of JP is going to come down and smite us all, and we're going to burn in hell. No, I'm just kidding. But he will smite us all. And I think that people are really, I think we started to see it 2-3 weeks ago once the turn of the year came around and people were really starting to pull back a little bit and say, oh my God, we just came off of a huge returning year. Some people were up 50, 70, 80, 100%, sometimes up 200%, depending on what they were buying into and concentrated in. And so I think a lot of people took a little bit of profits at the beginning of the year, but I still don't think we've hit that leg down with people recognizing that, the June cuts are coming in. Hell, I would personally, I really want a June kind of cut because it's a positive and negative, right? I want to refinance my damn properties as soon as possible. But I recognize that's going to be a year-long game. It's not going to be tomorrow. It's not going to be in March. It's not going to be in June. It's probably going to be later this year or early next, maybe. So there's that. So I have that, but that's not a big thing. To me, I just want people to recognize it's not going to be March because I want to buy some damn stocks. Like, I got my bonus coming in March. Like I got money coming in, my guys. So I think I got like a little bonus coming in at the end of this month. A little bit, like a little guy, like a little $2,000 guy, nothing big. And I'm doing a little bit of writing and side hustles and stuff. So I got some bonus money coming in from that as well. So we'll see we'll see what ends up happening. But to me, I think them pushing it out to May, June, it'll be nice to decrease for a lot of companies. I think a lot of these companies are still hanging on for dear life. So with that, we'll answer a few more questions, and then I'm going to write the timestamps for this episode, and I'm going to take it down so that we can put it on Cashflow Chronicles. And you guys can review it there. Underselling the potential of Rocket Lab growth could be 120 billion in 10 years. I also think that it could be 100 billion. No cap there, literally, no lie. No lie, my guys. But I just don't want to overpromise, Like I could easily see right now with where we're at and the trajectory, I could easily see 10 to 15 billion, which is a 5x. I'm more confident in 25 billion because why the hell wouldn't it be if you have 2 launch vehicles and you're making a couple $1 billion a year in revenue? Anywhere between 30 to 50% gross margin, you're probably going to walk away with a low to mid 20s ops margin, maybe 10, 15% net margin. So I just don't understand how it wouldn't be there. But for now, until I want to kind of sandbag it a little bit until we get a few more things, right? Like we still have to get the Archimedes engine test. We still have to do a few other things to really get Neutron on the pad. And once Neutron's on the pad, maybe I'll be a little bit more optimistic. Gonna get mad government contracts. I agree. JP is gonna cause a ruckus, Miss Laura says. Matt is too nice to think everyone is an a-hole. You're right. I try to be nice. How does a non-Indian person invest in individual Indian stocks? I was also under the impression it was very, very difficult for foreigners. Tata Motors used to be public, and then I don't know what the hell happened with that. I don't know if it got bought out by Mukesh or something. You're right. Inflation is going to be up. The Yemen thing, the Panama Canal, no bueno. Agreed. ADRs, Interactive Brokers. Interactive Brokers is really good. But all right, guys, I think it's going to be interesting. Really appreciate everybody stopping by. I didn't end up cutting off Twitter or what's it called? Twitch. I might start streaming on Rumble as well. Curious to see what people think about that. And I'm trying to look for other avenues as well. We'd love to continue to build the audience. Me and Kris are doing a really good job, I think, and up to 80 odd people tonight. And I think if we just continue the consistency we could get this to 150 people within the next couple weeks on a pretty consistent basis. So really appreciate it, everyone. And let me know if there's any comments, suggestions. I'm trying my best to keep up with the timestamps, etc. But much appreciated. And hopefully you guys, Tevis, you're the man, my guy. If you guys don't subscribe to Tevis, I will find you and hurt you. Francisco, thank you for the continued support. Everybody, thank you for the continued support. Really love the questions. And hopefully you guys will continue to watch the Cashflow Chronicles for many, 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 many moons to come. Have a good night.